Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 30th, 2024, and we're diving into Otis's third quarter earnings report. Otis, a leader in elevator and escalator manufacturing, has just released its latest financial results. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Otis's report is quite intriguing, especially with their strong service performance and strategic focus on modernization. I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Otis reported net sales of $3.5 billion for the third quarter of 2024, a slight increase from last year. However, the real highlight is the GAAP EPS, which surged by 47.3% to 134 cents. John, what are your thoughts on these figures?
Indeed, the GAAP EPS increase is impressive, largely driven by a non-recurring tax benefit. The adjusted EPS, which rose by 1.1% to 96 cents, reflects solid operational performance. The service segment, in particular, showed robust growth with a 7.2% increase in sales, underscoring Otis's strength in this area.
It's interesting to see how the service segment is driving growth. What about the overall profitability?
Otis's adjusted operating profit margin remained flat at 16.9%, which is quite strong. This stability is due to favorable segment mix, although there were some headwinds from the new equipment segment and corporate costs.
Operational efficiencies and future outlook. John, let's delve into the operational side. Otis's service organic sales grew by 7.7%, and their maintenance portfolio units increased by 4.2%. How does this impact their future outlook?
These figures are quite promising. The growth in service organic sales and maintenance units indicates a strong recurring revenue stream. Additionally, modernization orders are up by 3%, and the backlog has increased by 14%, which positions Otis well for sustained growth. Their focus on modernization is paying off, and it aligns with their strategy to offset challenges in the new equipment segment.
Speaking of challenges, how is Otis addressing the headwinds in the new equipment segment?
Otis is focusing on driving productivity and optimizing their cost structure. They're also leveraging their strong service portfolio to balance the impact of the new equipment segment's performance, which has been affected by market conditions, particularly in China.
Cash flow and shareholder returns. Let's talk about cash flow and shareholder returns. Otis reported a GAAP cash flow from operations of $394 million and an adjusted free cash flow of $381 million. They've also repurchased $200 million worth of shares this quarter. What does this mean for investors?
Otis's strong cash flow generation is a positive sign for investors. The adjusted free cash flow of $381 million indicates healthy liquidity, allowing them to continue rewarding shareholders through share repurchases. With $800 million in share repurchases year to date, Otis is clearly committed to enhancing shareholder value.
That's certainly encouraging for investors. How does this align with their overall financial strategy?
It aligns well with their strategy to maintain a balanced capital allocation approach. By returning capital to shareholders while investing in growth initiatives, Otis is positioning itself for long-term success.
CEO insights and strategic initiatives. Judy Marks, Otis's CEO, emphasized a customer-centric strategy and solid EPS growth for 2024. John, how do these strategic initiatives play into their financial performance?
Judy Marks's focus on a customer-centric strategy is crucial. By prioritizing customer needs and enhancing service offerings, Otis is driving consistent growth in its service segment. The expected 75 basis points of service margin expansion further highlights their operational efficiency and strategic focus.
How does this strategy impact their competitive positioning in the market?
It strengthens their competitive edge by ensuring customer loyalty and expanding their service portfolio. This approach not only supports revenue growth, but also enhances profitability, making Otis a formidable player in the industry.
Key takeaways. As we wrap up, Otis has delivered a solid performance this quarter with net sales of 3.5 billionaires and a significant increase in GAAP EPS. Their strong service sales growth and strategic share repurchases are noteworthy. John, any final thoughts on Otis's investment prospects?
Otis's focus on service growth and modernization, coupled with their strong cash flow and shareholder returns, make them an attractive investment. Their strategic initiatives are well aligned with market demands, positioning them for continued success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Otis's performance in the comments below. Until next time,